Kenya's private sector activity contracted slightly in March on the back of cash flow problems experienced by some businesses. According to the Stanbic Bank's Purchasing Managers Index, Kenya's PMS fell to 49.7 in March from 51.3 in February, an indication of a slight contraction in the country's output for the month. Similarly, new orders also fell, while the country workforce showed resilience for the third month in a row, as Jimmy Mbogo reports.
Though the decline was seemingly marginal, any reading of below 50.0 points signaled a contraction in growth, while those above show confidence in the country's economic trajectory. The March PMI index shows a negative private sector sentiment compared to February, which was the first time since August 2023 that the figures had gone above 50 points. According to IC Group economist Chachi Logutu, the expansion in the month of February was an outlier.
Looking at even the main points of the March print, I think two things stood out. Basically, contraction in new orders and also the output by the farms that were surveyed. But this one not, so this contraction was not even offset by some of the positives that you saw, some issues such as employment in some of the farms and also some stockpiling of inventories.
The PMI index further shows that some businesses reduced their purchasing activities in March, marking the sixth contraction in 7 months, attributing the decline in purchases to a drop in sales, with some firms also mentioning higher input prices as the contributing factor to the modest decrease that further undid the improvement seen in February. And the lower purchase further saw supplier delivery times index rise in March, pointing to a marginal shortening of an average lead time.
Monitoring how the shilling is playing around, probably they could just sort of wait and make the order once it's quite favorable. Another thing that may come in probably is cyclical effects coming in. Remember that towards the end of the month, we had now the Easter period coming into break. So probably some of the firms might have wanted to play it a bit safe, not just ordering before this break.
As inflation continues to ease, the index shows that expectation towards future output rose to a 4-month high, following the lowest sentiments on record in February, with low inflation expected to boost the demand outlook and support expansion plans, with the sectors of service, wholesale and retail firms being the most optimistic. Jimmy Mbogo, Citizen TV.